Hello, everyone. Thank you so much for joining this sale and also 1031 update for N007, also known as the Whiskey Road project. I'm here with Andrew, and we are going to talk. Really provide the partnership and update on this sale and also of the upcoming opportunities that we have in line that are produced from this sale, right, Andrew?
Many of you know we bought a three-tenant strip mall, which is in the picture right there. And then right next to the three-tenant strip mall is a Panera. Now, first of all, the Panera is pretty much on brand with what we do. Single-tenant restaurants with drive-throughs, right on brand with what we do. So we bought this whole entire property last year in March for $5.6 million. So the entire purchase in January, you have to remember that number, 5.6 million for everything. We are only selling the strip mall right now, which was exactly on plan. And roughly, keep these numbers in mind, the strip mall is 65% of the deal and Panera is 35% of the deal. So we are going to sell 65% of the deal right now. We got a full price offer immediately when we listed it for $5 million. So,
wow.
So the big joke internally is that we bought this whole entire strip mall and the Panera, and we basically got the Panera for free. We're selling the strip mall for $5 million, and the whole deal cost us $5.6 million. And arguably, right now, the Panera is worth about high twos, and broker told us we could target a sale at $2.8 million. And so that is still on the table. But what we're doing right now, the Panera operates great. It's a single tenant, triple net deal, and it's right on brand with what we do. We're closing on the strip mall at it's the end of May. Target closing date, the last closing date right now would be around May 31st. But of course, that we could close earlier, or a little bit later, just depending on how things work out. And so, if you look at the overall value of this purchase from last year, we paid $5.6 million for it. And arguably the value right now is $7.8 million. So this was an excellent purchase for Greenleaf, for our investors. And so since we've only had this deal a year, Dominique, what do you do with the deal you only hold it a year? When you have a big capital gain like this, we want to move it forward tax-free so our investors don't have to pay taxes on the sale.
Absolutely. So we are offering a 1031 exchange here, and our investor relations team will be collecting those 1031 participation interests. Before we dive into the 1031 timelines and the upcoming steps, we do want to discuss really how the cash flow of the sale works. So Andrew, can you just explain this chart here?
Sure. So the sale price of the actual strip mall is going to be $5.035 million. Closing costs are around $180,000, which includes the brokerage commission, some legal. Right. Our loan right now, we're paying off 65% of our loan, so we're going to pay off $2.3 million of our loan. Maybe there's some accounts payable left, about 20 grand, and so overall, the return of capital will be about $1.4 million.
And we did skip over that preferred return rate. It is all paid to date. We love to see that with our triple net and retail deals, huh?
Yes, we're not behind on preferred returns. In fact, we have already made profit distributions on this deal too. So all along, investors are receiving their preferred return and profit participation. And at the end of the deal, there'll be a limited partner distribution and, of course, a general partner distribution, which is documented at the bottom. The key number of everything that an investor looks like, if you just invested $50,000 in the strip mall itself, which of course everybody invested $50,000 in the strip mall and Panera, so it gets a little bit more complicated. But the overall rate of return for this investment for just 1 year is 44% with a 1.6 equity multiple over the life of the deal.
Absolutely. So our next steps here are really to identify new asset opportunities to roll over this 1031 proceeds into. And right now, Andrew, we do have one of them lined up, correct?
Correct. We have one of them lined up, and we will more than likely have to identify more than one property. So some of the proceeds right now, we're going to roll into Applebee's Killeen in Texas, which is a remarkable purchase also. And just from very basic metrics, we're selling a deal at a 6 cap, and we're going to trade into an Applebee's that in year one will be at a 7.2 cap. So we're essentially creating, if you're just looking at cash flow, if you invested $50,000 in a 6 cap investment, you're going to roughly earn about $3,000. However, if you invested $50,000 in a 7.2 cap deal, you're going to earn roughly $3,600 for basically an additional 20% cash flow. So by trading into this deal, you will be making more money because we're selling at a lower cap rate and then buying at a higher cap rate.
Right, right. So now we're going to kick off our discussion for the Applebee's Killeen opportunity. We did have a property video overview that we provided for our other partners in this deal, and we're going to go ahead and include that and start that now.
Applebee's Killeen, the 5,000 square foot single tenant net leased Killeen, which we are very excited to tell you about. David will be very excited to talk about Killeen. He was the one who actually found it.
Andrew, you're not kidding. I'm excited about this one. I chased after this one for about 3 months, watched it go under contract twice. And as much as I had to tell the broker, who we have a wonderful existing relationship with, that I hoped everything went smoothly for him, I have to be quite honest, I was lying to his face and was quite happy when, thankfully for us, both buyers dropped out of contract due to their 1031 requirements not matching up with this property.
The purchase is going to be a $4.5 million purchase. The rent is roughly $300,000 a year. The cap rate in year one is a little low, but that's actually okay because we're getting a rent bump pretty much right after we buy it, and that brings the cap rate to a 7.3 cap, which is right in line with where we buy our properties these days too. And this is also a very unique property too because we have a ton of term left on this lease. It's an absolute triple net lease, so there's nothing for Greenleaf to do other than pay the mortgage and make sure the tenant is paying rent. And it has 9.5 years left on the property. So by the time we close, we're going to have 9.5 years left of term on it. Typically, we like to sell properties with 5 or more years of term left on it. And so we're targeting a whole period of around 4 years. It hits all of our metrics. So the biggest thing we look at when we're looking at Applebee's or any type of restaurant is a rent to sales ratio. If you look in the bottom corner of the slide, you'll see some of the other Applebee's that we've done. And this one right now has a 7% rent to sales ratio. And typically we're targeting buying restaurants anything less than 8%, and even 10% is good for some restaurants, but this one is remarkable at a 7% rent to sales ratio. So basically their rent is going to be 7% of their overall sales. And this is it's the second to the lowest rent to sales ratio of all the other Applebee's that we have purchased.
Our experience, as you can see from the 5, this will be our 5th actually, but showing the data of what we've done, following our model of looking for Applebee's, which is a strong brand, as everybody has heard from our different live streams, but a lot of cash on hand, growing brand, adapted well through COVID, and fitting with looking for the highest selling locations and strong rent to sales, which will fit really well into our portfolio. And our track record and relationship with this broker actually allowed us to get this property for $250,000 less than the other offers. Really strong purchase for us, speaks to the strength of our team in building those relationships and knowing the markets and what we've done with Applebee's so far.
All right, so David, tell us why you're really excited about this location and why it's going to be an easy Applebee's for Greenleaf to do.
Applebee's is the 24th ranked brand in Restaurant Business Magazine, who ranks all the major brands on a yearly basis. And Applebee's is also actually the biggest casual dining brand. They are Applebee's and IHOP together, who have over 3,000 units and are really the behemoth of the casual dining industry, which really helped them execute through COVID, adapt, and their sales are up 7% across the board on same store sales bases from 2019 to 2021. So you could see this store fits that mold. It's doing $4.2 million a year, which is the highest Applebee's that we've seen. And the data is supported both within the brand, where it's high performing, and also within the local area, because in addition to the brand, we want to verify that it's high performing in the local area. And as you can see, it's 88th percentile, which is 16th out of 130 restaurants located within the 5 mile radius of this property. It's on a primary corridor, and it's really ranked at the top performer of this corridor. So they're very happy with this store, both in terms of foot traffic and the overall sales. And Applebee's as a brand is about as strong as it gets in terms of casual dining.
And David, we should also say about the Placer data too is if we just rank this location compared to all the other Applebee's there are in the state of Texas right now, according to foot traffic, this restaurant is the 14th busiest when it comes to foot traffic out of 88 restaurants in Texas, which puts it at the 85th percentile of foot traffic in all of the restaurants in Texas. So that's a pretty remarkable statistic. And even the 50-mile radius of this particular Applebee's, there's 8 of them. And of the 8 Applebee's in the 50-mile radius of where this one's located, this is actually the first one out of the 8 Applebee's. So it just checks all of our boxes. We know it's busy. We know the sales are great. And everything about this Applebee's just works really well. So the location is in Killeen, Texas, the Texas Triangle. And the Texas Triangle is it's Dallas, Fort Worth, Austin, and Houston. This whole area where I think, David, is it fair to say most of Texas commerce is in this little triangle?
Not only most of Texas commerce, but a full 7% of the entire U.S. GDP occurs in this triangle. And it's called an economic Godzilla. It's 4 of the 20 largest cities in the entire country in this triangle within a few hours driving distance of each other. So looking for these megatropolis areas that we want to be in and break into Texas, when you want to go into Texas, being right in the middle of this triangle, as you can see Killeen is, and well located within the triangle on a major interstate, over 100,000 cars a day, that's an area that it's very compressed in terms of the cap rates. And to get such a strong brand, a strong performing location in the middle of this triangle, that shows exactly what we're trying to do with our Texas strategy.
David, I'm still missing all of the excitement in your voice and why you're not moving to Texas. Why don't you tell us a little bit about the comps?
So in this case, as we've mentioned, Texas is really an animal unto its own in terms of cap rates. The same goes for Florida. So whereas with previous Applebee's, we've really compared with our broader 5-state location that we deal in to understand the overall markets. Here we've generated a specific comp set of Applebee's in Texas that have sold in the last year. And what we really like about this, as you can see on the cap rates, we're buying this for 58 basis points above the average cap rate for an Applebee's in Texas. But the 2 comps that I'd really like to highlight are the Fort Worth comp, which is number 1 on the screen, as well as the McAllen comp, which is number 3, because when we look for comps, obviously we look at all the Applebee's, but we try and zero in on the ones that are really similar. And these 2 are actually from the same franchisee with the same lease term remaining and the same 10% rent bump coming in 2023. And these both traded for a 5.75 cap. In addition to those things, they're both in highly trafficked areas, big 3-mile populations, similar to our Killeen property. So when we compare them, those are extremely direct comparisons, and we're buying that. And when you compare to those, you're buying this for an even greater spread compared to those 5.75 caps.
So what is the investment? So right now, the contract price is $4.5 million. Closing costs are roughly $167,000. We, for a triple net property with no maintenance, we typically reserve 3 months mortgage payments, which is $47,000. And so the overall deal cost is about $4.7 million. Of the $4.7 million, we're going to take on about $2.9 million of debt, and then it'll be roughly $1.8 million of equity. The preferred return and all the return and fees are typical of a Greenleaf retail deal. And if you go to the right-hand side of the slide, this is what everybody's wondering about. So number 1, your investment return, including principal paydown, year 1 will be 9%. But then in year 4, we move to a cash-on-cash return, which is, we call it the beer money, will be close to 7%. And then the total investment return of just cash, if we not sell it, including principal payment, would be 11%. And then what happens in year 2 is we actually get the 10% rent bump. And so year 1 will look very different from year 2, 3, and 4. Year 2, 3, and 4 will be very similar. So that year 4 return will be somewhat similar to year 2 and 3 also. And so on this slide, this is it. This is kind of the meat of the deal. We are targeting right now an exit in year 4, which will leave 5 years of term left on the lease. And if you look at the bottom of the screen, we are targeting a 6.25 exit right now, which roughly gets us a 13% overall project return. But you remember on the previous slide, David talked about Applebee's are selling in, high 5s or 6. And so if we look at the exit sensitivity table, and if you get to the 6 cap sale or the 5.75 cap sale, you're getting to that 15 to 17% internal rate of return, which is a pretty remarkable return for a retail deal. We're happy sometimes with 10 to 12%, but this is a phenomenal producer.
Well, thank you so much for joining this sale update with Andrew and I. We do want to remind our N007 Whiskey Road partners of some upcoming dates. We do have a targeted closing for the shopping center scheduled towards the end of May. Coming off the heels of the N007 closing, we anticipate closing the Applebee's Colleen project. It does have a possibility to bleed into the beginning of June, but nevertheless, we are super excited to roll over these 1031 proceeds into the Applebee's Colleen project.
And don't forget we're not going to be able to roll 100% of the proceeds in this one, so we are still looking for identify an asset for the remainder of the 1031 proceeds too.
Right, exactly. Well, if you have any questions, please do not hesitate to reach out to either of us or email invest@greenleafmgmt.com, and we are happy to help. Thank you so much for joining today, and we look forward to speaking with you soon.
Thanks. Have a great day.